Okay, so thank you everyone for joining and welcome to today's webinar. We'll be helping you understand the value of the latest technology from Anaplan for financial consolidation and reporting. So just before we begin, let's go through a few housekeeping points. The webinar will last approximately an hour. If you have any questions, you can submit them at any time using the Q&A or chat function, and we'll address them towards the end. We are recording this session, so we'll share the link with you all afterwards so you can rewatch it back at any time. Give a quick overview of the agenda. So first I'll give an introduction to our speaker, Howard. Then we'll give an overview of the Anaplan FCR solution. Howard will go through an in-depth demo of the solution and also look at the benefits for existing Anaplan users. So I'm pleased to introduce Howard Markillie. Howard is the Chief Services Officer at Kabeelah, an IT consulting and services provider focused on delivering end-to-end digital business applications and technology solutions. Over the course of Howard's career, he has built up an extensive experience initiating and delivering business process improvements, primarily through the design and delivery of EPM platforms and financial reporting systems. He was originally an accountant and project manager within customer environments, and subsequently, he's been a consultant in leading systems integrators. He's been instrumental in the delivery, commissioning, and BAU support of global consolidation and reporting solutions for FTSE-listed global organizations, including Charter PLC, Colfax, BAT, Cafe Nero, and Card Factory. Howard is well placed to add value to any organisation looking to leverage the benefits of financial and business information system solutions. He brings the ability to understand business process, management information, and accounting issues, and translate these into viable system solutions and effective business processes. This is complemented by his vast experience in understanding and explaining any potential constraints and acts as the interface between business and solution providers. So, Howard, with that, I'll hand over to you to get us started, if I may.
Thanks, Carrie. Hi everyone, welcome to this webinar. My plan today is to give you, in the next 50 or so minutes, an overview of the Anaplan Financial Consolidation and Reporting solution. To save time, and my voice will refer to it as FCR, so Financial Consolidation and Reporting. This is an application within the Anaplan toolset, which supports statutory consolidation alongside some additional reporting capabilities and links in both upstream into the Anaplan universe through ADO, Anaplan Data Orchestrator, and out into the final mile reporting into Anaplan Disclosure Management. We won't be looking at either of those during today's session, but just so you're aware, there is an end-to-end component element of this. So if you've got existing Anaplan customers or you're on Anaplan yourself for planning, then Anaplan Consolidation FCR is a very useful application to add into your portfolio that allows you to take data from your planning environment and potentially use your consolidation engine to consolidate it alongside your actuals, and then ultimately push it out through disclosure management for either management reporting or more likely statutory reporting. Again, both of those are completely separate sessions. So my plan today is to give you an overview of the solution and the solution set using a pre-canned demo. It is a demo. It has been put together to provide a roadmap for us to follow to show key areas of the system. But at all times, just bear in mind that every customer that I've implemented this for recently has a completely different view of the solution. If you imagine having Excel and giving Excel to several business analysts and telling them to build a model, whilst they'll follow best practice, they will probably end up with 3 different models that get you the same result. and that's very much the case with this tool set. It is a cloud-first third generation consolidation solution. So a lot of the people that built this solution had extensive knowledge of other systems through Outlook Soft, through Venna, and ultimately SAP VPC. And if you're used to those systems or have any familiarity with those systems, you'll see that as we go through this. But they built it, again, as cloud first, software as a service, designed in the cloud. The major components, the major management of the system is done through web interface, which we'll look at extensively, and supported by the Anaplan Excel tool, which is a common reporting tool across the Anaplan platform. Again, we'll spend a little bit of time looking at that in some detail, but as we go through the demo, you'll see how we link through and how that link backwards and forwards between Anaplan FCR and Anaplan Excel works. My objective today is to take you through a scenario, again, demo scenario of a potentially typical monthly close process, showing you how the system might look to follow that process through, and then spend some time looking at how you would, I want to say configure, but again, this is a no-code system, so we're not actually writing code to do this. We're taking existing componentry and using building blocks to build the solution that we need and look at how you would do that. So the first part of the session is going to be very much from the user perspective, and then the second half of the session will be from an administrator and project perspective. There will be hopefully a little bit of time for questions at the end, but there is a lot to go through today. And I'll say from the outset that, should you be interested in learning more about FCR, then do reach out to us after this call, and we can arrange to have the Anaplan team together with Kabeelah actually talk to you more about what FCR could do for you or for your customers. So without further ado, let's get into the solution. And this is where I need to remember how to use Zoom. Here we go. So you should have in front of you basically a web browser. And this is the starting point for your entry into the FCR solution. It's a web-based solution, as we've said, fully configurable. You typically would have a home page, which is what we're looking at the moment. And down the left-hand side, there are a series of what I would term to be modules that have different functionality, depending on what you need to do. We'll look at these in more detail when we go through the admin section, but suffice to say at the moment, these modules are all surfaced to me because I have administrator rights, but they can all be hidden from general users, as can, for example, the Explorer, which is a way of navigating through the content and objects of the system. We can secure folders, subfolders within this structure. So you can have a development side, you could have individual folders by geographical group, etc. So it's fully configurable from that perspective and fully secured. And we'll hopefully get time to look at the secured. So our start point going into this, we have a dashboard, and the dashboard will typically show all of the workflows that are in process at the moment with a nice kind of green. Green is good, we've finished it. Blue is in progress. Yellow is upcoming and red is overdue. So an upcoming process is pending, a blue process finishing. Overdue means that this should have been finished by now. So what we're going to do ultimately is to start working through one of those. But while we're here, I just want to run through this is the interface for you. So again, this is completely developed by a a financial or business systems administrator. It doesn't require any HTML coding or anything else. We have a series of tabs up here. So the first tab shows me in a little more detail what my closing process is going to be. So again, in this one, we're going to start the process each month. We're going to do some maintenance. And then once we've done the maintenance, the various business regions are going to complete their month-end process. We're going to complete consolidation, and that will give us the consolidated results. Fairly straightforward, fairly standard process, and that's going to come through here. Just quickly through the other tabs then, the analytics tab here, we have a representation of a dashboard that's been put up for the demo. And this dashboard has a series of widgets in it. Each of these widgets has been specified in Excel. So effectively, we in an Excel that we published from, we built a graph for this and a waterfall graph for this one. You can see here that we've got extra widgets in here. These are cell-based widgets that come with the Anaplan tool. So it gives us, based on the formula, the ability to show some very nice graphical representations. And in this case, we've got what Anaplan FCR calls a slicer or a context, where if we make a change in here, we see that the entire dashboard refreshes and updates. We also have included in that tool set the ability to geotag. So you can see down here quite a nice representation of the world. As I change and move through this, you'll see that the geotag mapping moves around. And that's comes out of the box. We just need to make sure that we tag in the properties of the entities the correct geocoordinates. So everything is changing on here based on the context up here, which makes it very useful to surface for senior executives or users who wouldn't necessarily have access to the system on a very frequent basis. All sorts of representations are possible. So if we look here, we've got a liquidity portfolio of performance. Again, this is tagged to the context from the previous slide. So if I change this here, it will update and show me a different graphical presentation based on the selections I've got up here. And profitability is the same. So that's a very useful way of presenting information, as you know, with dashboards. And we can make this available to users who don't necessarily need full access to the solution. If I go, there we go, back one stage to home, moving along, I can surface different types of report into the web, again, so that the users don't need to understand how to build reports from scratch. Knowledgeable super users can build them for them and then publish them to the web, again from Excel. Again, doesn't require IT input. Typical report here, self-service report. This is looking at the balance sheet. Wherever there's a plus, if I double click on it, it will drill into the data. I'll click on here, it expands it. If I change the slicer parameters up here, so if I replace total group by USA, and again, this is drag and drop, so it's a bit like pivot tables. It updates, and we can also move, so let's just move entity from up here onto the columns. And you can see that's now switched with date. So I can now drill across by account for that particular date. Again, this was built in Excel. All sorts of variants are possible, and they can quite easily be published to the web, subject to the user security. We look at another variant of reporting that can be published in the web. This is a more stylized, formatted report where the column set doesn't change. It's not designed to be dragged and dropped like the other one, but it works on a similar basis. We change the context up here. it again updates. These graphs here are part of the Excel toolset, so they're again widgets that can come in. So we've got something that allows us to present data to users that are not necessarily going to have full access to the system quite easily. The final one on here, just something we always get asked about. Can we store comments? And the answer is yes. And you can see I've been playing around with this for a while. But basically, you select a piece of data, add a comment. So 282603 12 1614. I add my comment. And now when anybody sees this report, they're going to see this comment. If they then want to respond to it, they can add their comment. And again, that is also surfaced in this report. And if somebody wants to see, well, what was that all about and what we were looking at, we can look at the comments individually and see what it was against. So this was against employee costs, such as reporting for US dollars. So very useful. You can also add attachments on here. So, whilst you might have some very brief textual content here, you might want to say, well, actually, the variance here is explained by this, and attach the file that has all the workings into the comment. So a very powerful way of seeing the data. So the web is a very useful area for your users to enter and become accustomed to, and it provides them with access to a number of pieces of information. The web pages themselves, as I said, can be easily configured. So it's a case of just look at mine if I want to edit it. These are just panels that you can drag in. So I can drag an image in. I can then go and find the image, link it to a file, wherever I've got my file content. They all have to be uploaded into Anaplan Excel to do that. And then click OK, and it's in the file, in the report. I can put HTML links in, I can put text links in, etc. Reports, as you saw before, and you just specify the width and depth of the cells that you want to report, and that's how you format it. So again, very easy, and an easy option for users for those users with access to be able to configure quite nice dashboards and process steps. So what we're going to do now is actually start working through that the workflow that we first looked at, the consolidation workflow. So the first thing that I'm going to do, again, as the system administrator, or the controlling accountant in this case, so the group controller, he's going to initiate the monthly workflow. So we're just going to open the workflow here, and you can see the workflow. These can be edited really easily. So I can go to my toolbox and I can add in different blocks, and I can link them, and I can have success or failure. So you can put error trapping in here. So we've got a couple of ways of communicating out of the system here. The first one is down here by Slack or Teams to a Teams channel. So this would say, once the maintenance step is completed, send a message to the Teams channel, and all those people that are subscribing to that channel will be able to know that the system is ready and they can start their process. In this case, if the consolidation failed for whatever reason and we trapped the error, we would probably send out not a report necessarily, or you could load a report that allowed you to check the result, or we could send an email for an error email. This is sending out an email to a specified number of users that the process is complete. So we're not going to change that. So let me just refresh it and lose my changes. I'm going to start the process. So we're off, we're running. We're now going to start working through that process. So if we go to home, you can now see that the consolidation workflow is up and we've got one item in process. So let's just have a look at what that looks like here. So we've got a series of steps now. We've broken down that graphical representation into the actual steps we're going to complete. Over here, we've got the first item is in progress and we've got a number of upcoming tasks. We can't stop the upcoming tasks until the in progress item is finished. So we'll look at that one first. This is a maintenance task. Again, this is all included in the demo, but actually in larger solutions, some of these steps might be done outside of the workflow or the work process completing. So you might have a system administrator responsible for a number of these steps, and really the group controller is just responsible for triggering a workflow that says, now get in and get your numbers loaded. These links link out to the modules on the left, and we'll look at those in some detail later. The Excel icons lend us out to input schedules or reports. ERP mapping here links us out to the solution for ETL on the Anaplan FCR side, which we'd look at. Then we obviously need to load exchange rates. We could look at the consolidation rules, which again we'll look at, and we may want to just check the goodwill report here. So a number of activities to be completed to allow the system to be ready for users to get their data in. So if we click submit here, you can see this one is now completed. And if I click refresh, we've now started a process here. And you can see as these things are clicking up, that a number of separate items have been triggered by that. So these are all in the various limbs of that process. And in order for the demo to work effectively, all they're doing is just sending out a report book. They're not actually going to do any detailed work, but that's just for the demo. We'll focus on working through the demo for the US block. So my first exercise, which I would see as the user, would be to go in here and import my trial balance data. So I've already specified how the data is going to get into the system. So if I open the template here, this is the format of the data that this load process is accepting. This is specific to this very specific load process. It's expecting data in an Excel file or a CSV file that has account, entity, intercompany, movement, a department, a product, scenario, etc. This is a very simplistic view. I have got customers that have got 20 columns or so, or 30 columns, because that's the way that the data is provided from their data mart or whatever. We may only need 5 or 6 of them, but rather than trying to pre-manipulate that file and then load it, it's easier for us to load the whole thing and then just take from it what we need. So once you've got the data into the file, save it, and then we would run this import process. Upload allows you to go and find the file. Now, this is a very simplistic view. What we're finding increasingly with the large customers that we're working with is that they don't want this process to work. This is something that I was doing 15, 20 years ago. More and more companies now are coming to us with single ERP, single instance of data. They want to do integrations. They don't want to have their business units inputting data. It's a waste of time and they feel that they're losing control. So this step generally is not a manual step anymore. It's going to be a full integration into an ERP that's controlled centrally. Now that could be into a data warehouse. It could be to an export. It could be to SQL. And increasingly for the Anaplan universe, it's via ADO back to Anaplan Planning, where we're seeing data being staged. So I'm working with a customer at the moment where the Anaplan Planning team are pulling all of the transactions from the customer's Microsoft Fabric data warehouse or data mart into Polaris in Anaplan Planning, creating an input a trial balance by entity, and then we're going to take that trial balance through ADO into FCR, and that's the way it's going to go forward. But this option of loading a file is still there. We may find that once they've got all the data in, they might need to load, for example, debtors aging information, or they might need to load fixed asset analysis for asset notes, etc. So we can modify this, and we can have multiple different versions of load files with different definitions that we can bring in. So if I click complete on there, quickly refresh this. There we go. I've got the data in now. The next step will be to review the input. So this is when we first start to see forms that are going to show us what data's come in. So I've just clicked on a link there. It's going to open into the web again. Similar to the report we saw before, this one is by audit trail, which is a key component of the FCR solution. It allows me to track the lineage of a piece of data through every step of its journey. At the moment, we've just loaded it, so it's all on this source GL member. If I input data through an input schedule, for whatever reason, it's going to appear on here. And then I've got options to post journals against it, which could pick up, which would go into a different data source and on. So at the moment, there's no consolidation entries or anything. So this would pan out this way. And again, this report would be tuned to data reconciliation, data validation. Journal entry, and this links out to the journal module. And let's ignore that for the moment. So journal process is similar to one that you'll be familiar with if you're posting these. We're selecting an audit trail, a currency for the journal, the date, the entity that it relates to, and the scenario. We can make it recurring if we want to. We can add a tag, and this is quite important. A tag is not the description of the journal. A tag is a way of grouping them. So, I don't know, FY year-end 2025. You could put that in as the tag, and then any journal that relates to that, you tag the same, and then you can filter with them with the sort that we saw earlier. So let's just quickly do this. Date. You'll see that the parents are grayed out. We can only post to leaf members or the lowest level of members. Let's just stick it to no entity for the moment. Click OK. And now I've got an error. And this is one of the beauties of the system, it error traps. So it's telling me that I can't actually put this journal in because the audit trail that I've selected for my journal input isn't actually a valid audit trail. So I'd have to go in and change that to correct it. So in this part here, where are we? Input is wrong. It would have to be way down here in manual journals. And then we need to select one of those. Once you've done that, you just enter lines in the journal as you would normally, like any journal. It has to balance. It won't save if it doesn't balance. Saving, posting, and unposting are 3 separate steps. And then you can obviously see them up here. So it's quite a powerful tool, but again, as time's moved on, we see less and less of journals being used in the consolidation solution. Businesses are really trying to push to get the data correct upstream and providing their using the consolidation system to highlight errors and get them pushed back and processed through the transaction system and reloaded. So really the only journals that they're looking to post in the consolidation solution are those that are off ledger, like, I don't know, adding goodwill on consolidation, if it's not included, those kind of things, mainly large reclassification journals, for example. So increasingly, we're not seeing a huge number of journals being posted because the idea is the data should be in the ERP and flowed through. Okay, time is pressing, so let's just try and move through this a bit more quickly. So, journal entry. I just want to look quickly at an input schedule, just because we can do this. But again, increasingly, I'm seeing customers not wanting to even consider doing input schedules. They don't see the value of them. But this is just to demonstrate that it's possible, and also talk about a couple of things in the solution itself. Input schedule here. Yellow cells are highlighted so that we can input to them. So we can't input in the schedule to anything that's in grey. If you look over to the right here, this has got a validation on it. So at the moment, the opening balance plus the net variation auto gives a closing balance of 6.2. If I enter data into this cell here, notice that the totals haven't updated yet, but automatically over here, it's now showing me that I've got a validation error. If that's all I'm going to do, then we can save the data. So I just click Save up here. It pushes the data into the solution, into the system, into database. And there's a little pop-up on my other screen, which you won't see, that says it's done it. And then it's going to refresh the report. But before it refreshes the report, it's going to run some calculations for me. And importantly, what you will see once it comes back. So in the background, it's doing a number of processes, which could include actually running a consolidation, etc. But importantly here, if you can recall the original report, you can see now that the net variation has been reduced, and we're back where we can check it again. So this kind of schedule is typical for an analysis of maybe fixed assets, or potentially for other cash movements that you're going to use for your cash flow. Where we've loaded the closing balance, the system has calculated a movement, a net movement, and then we're going to go in and break that net movement down by specific buckets to make our cash flow reporting more accurate. These days, what I'm seeing happening is the closing balance is loaded, but then we're reloading all of that data using a transaction type field to map it to individual movement flows. So increasingly, once it's been loaded twice, the net variation is going to be reduced significantly, and whether you need it to be zero or not will depend on your policies, but there we go. So pretty straightforward. This is, something that you see quite commonly as an input schedule, but funnily enough, less commonly now because people are not using input schedules as much as they did before. So I'm going to assume that we've done all that. Quickly click submit, refresh again. And now, the cash flow review is just a simple set of reports. The cash flow can be generated by business rules. So based on the opening and closing and the movement, you can generate an automated cash flow in the solution. The cash flow is based on each level of data. So we don't, if we're looking at a consolidated cash flow, it's not an aggregation of all of the cash flows below. We're applying the same set of rules against the consolidated balance sheet and P&L. Again, this is a representation. There are others. So I'm just going to move through that quite smartly. Intercompany is becoming increasingly important. Often in the ERP, it's not possible to see where there are differences between intercompany, and businesses want to try and trap those and eradicate them. And again, through this process of pushing changes upstream. So the system is capable of generating a matching report. In this case, we're matching all of the balance sheet current assets in the entity against all of the balance sheet current assets in the intercompany trading partner and looking for a difference. The report is set up so that it has a tolerance. For zero difference, we get a green tick. If there is a difference within tolerance, we get an orange question mark. And then way down here somewhere, it's out of tolerance. So now we've got a red cross, which would mean we would need to investigate that. We can also post the differences if you have a process where, or a policy where, for example, the seller is always right, but I don't actually see that happening on a regular basis. It's more a case of highlighting the differences by counterparty and pushing them back. So in this case, E210 Holding Canada is saying that it's got this much on its intercompany receivable, whereas E140 USA Midwest hasn't on its payable. So it seems to be a disconnect between short-term receivables and notes payable here, which would potentially correct it if you see the two added together. And that would be sent back upstream for them to correct. But again, you want to try and avoid that being the case for your reporting units. We can match transactions. That's a whole different demonstration where we're actually loading at the account level by transaction, and the system is looking to try and match transactions based on a unique set of keys, date, counterparty, various elements of the transaction that we try to match. We haven't really got time to look at that today, but it is possible, and it's an exciting piece of functionality in the system. So let me just submit that one again. And you can see as we go through here that we're gradually getting to the point where we've finished the process. And there's a few more steps to go, but within those, we do a sign-off process. So is it approved, yes or no? And then you can put a backward loop to say, well, if it's not approved, it needs to go back to somebody to fix. And then ultimately, if you remember from the overall consolidation approach that we've got, we look at that, you can see now we're in here. These three groups are green, they've finished. The USA group is still in blue, which is the one that we're working on. If we mark these as completed, sign off, we're going to approve it. And then look back over here. I'm still waiting for the USA group at this point. So you can track the process through here, which is really good. So far, so good. That's the process. That's what the user will see. But what does the administrator or the project team see? And what they see are these modules down here. So within FCR, we have a series, in this case, of models. Each one is going to be designed for a specific purpose. We don't typically do planning per se. It's quite rudimentary in FCR, but we might be doing planning of more strategic scenarios. So looking at data, we want to secure this away from other people, for example. We can bring in market intelligence, and these would all be slightly different views of data, but our primary one is the consolidation demo. And you can see that this is made up of a series of dimensions. Um, the main dimensions are all required, so account, audit, currency, data view, date, entity, interco, movement, and scenario are required dimensions, into which we've added some additional dimensions for this customer. They want to see department and product. FCR can support any number of dimensions, but it's important during an implementation process to really understand the use case that would justify those dimensions. If your product, for example, allows you to split your financial statements by 3 or 4 different business areas, I don't know, manufacturing, retail, for example, useful for statutory purposes. But if it's at a SKU level, not so good, not so realistically included in a consolidation solution. So important to think about that. And increasingly important to think how it's going to be populated, because every one of these has got to be populated. So I've got customers who've got 5 or 10 extra dimensions, but they're actually not using them for consolidation at all. And they don't actually know why they've got them in there now that they've got to the point of consolidation. But each of the dimensions is a building block, and we can look at those and how we would build those. So if I look at a simple one to begin with, we look at scenario or category. This is these are different variations of data. So actual, obvious, that's my real actuals. Budget is something that I've created looking forward. Forecast is typically a blend of actuals and my forward-looking statement. And then in this demo, we've got some FX rate scenarios. So I want to look at actuals at budget rate, which means I can compare my actuals directly with my budget. Actual last year, so have I actually made any improvement in real terms? So have my sales gone up in real terms because I'm translating my current year sales at the same FX rates as last year, prior period rates, etc. So what, if I'd done this last month, what would it have been? These are really useful because it means that we're taking data from one place, applying a different set of rates to it, and storing the result only in a target. So we're not massively duplicating data. And we have the ability to specify ownership sources. So here, for each of those actuals, I want to use the same ownership for consolidation, which means I only have to update the ownership once, and all 4 of these will follow the same process. So a lot of flexibility here, but again, changing it is a case of entering a cell and making a change. So if I want to change the ownership scenario from actual, I simply go in here and change it to something else and save it. I'm not going to save it. Doesn't require coding. It doesn't require IT. It's great. That's a simple scenario. It doesn't really make any sense as a hierarchy, but these are just for grouping and navigation, these parents. If we look at a true hierarchical scenario like account, this is how the account hierarchy has been created. So if we drill in, we drill in, we drill in, we get to the leaf members, where the designers have helpfully given us a little maple leaf icon because they were based in Canada. So all of these base members are where we're going to load data as an account, but they're going to automatically be rolled up to something called direct revenue. So if I create a report and select direct revenue, it's going to give me the aggregation of all of these accounts. You'll notice that the top 2 here have got a little arrow off to the right. That means they're shared members. So somewhere else in this hierarchy, or somewhere else not necessarily within the income piece, but outside of it, the values that are being posted to these members are being included somewhere else. So we might have within this hierarchy a different view of revenue. So we might use these. So potentially if the business is thinking of using an alternate presentation of the P&L, which is allowed under IFRS, then they may load the data once and have it coming up in two different views, just to see the impact of that or to be able to compare them. Adding members is quite straightforward. We can just right click here and add a sibling. Or if we're on a parent, we can right click and add a child. We can move members, so we can cut, select a parent and paste as a child. So let me just do that. Copy, sorry, cut. I want to move it up a level, so I want to paste it as a child or as a sibling or as a shared child. We can move them around, so we can move them up and down within a hierarchy to get the order that you want, the presentation that you want. That's all doable on the face of the web report, the web interface. You would simply save it and reprocess it. For larger dimensions, you can export into an Excel sheet and you can make changes in that sheet, which means that you can back the dimension up if you want to, and you can make large changes and then you can reload it. So that's what we've got here. You can see this is specifying for this account, this is the account dimension, the name, which is usually a unique identifier that you want to see, the description, and then there are a series of properties off the right. The system is designed as caption FR. I can specify the system to accept translations of everything in each dimension in this caption FR. So want direct is direct revenue, funny enough. And there's a flag that I can set in the report. So I can build a P&L report. And if the user is English or from an English speaking territory, then the report would show this as the caption. If they are from a French speaking territory, it would show this as the caption. It's the same ID, but it's just going to show a French language presentation. The properties over here are used in the business rules, which we will look at. So let's just look at quickly. Let me filter this because we will see it in a moment. Data, filter. So if I look at the look at conversion here and look at NBS, all of the balance sheet accounts are flagged as NBS. And what that means is the NBS rule for conversion is going to be applied to that account. And then if I look at, for example, the consolidation property, let's just look at stockholder equity. That basically is telling me that for these three accounts, the stockholder equity consolidation rule is going to be applied. So remember that, and we'll look at those in a moment as we go through some more of the configuration. So dimension, quite straightforward. We can add additional hierarchies. So if you want to see information in a slightly different roll-up, we can add those for presentation or other purposes, but it's the same base data, just rolling into different parents. And that's the same for all of the dimensions. Importantly, just looking quickly at the dimensions in terms of usage, the movement dimension is the way that we get from opening to closing. So we've got opening, we've got all of these different, in this case, these are to do with business acquisition, but the cash variation in and out, non-cash variation in and out, CTA to closing. So We add all of these up, we should get to the total balanced account. So that's very important because we'll use those in cash flow. And if you see here, we've also got the breakdown by aging. That's another way of breaking the data out. Again, quite useful. And just finally, we clicked on it briefly, the audit trail up here. You can see we can drill in, and we've got various roll-ups of the audit trail, which eventually gives us the contribution. So again, the lineage of the data in terms of what it came in as and what we've done to it through the system is visible. From a currency perspective, we load all of the data against the functional currency that it comes in as, and then we can specify reporting currencies. So in this case, USD is the main reporting currency. We would load data against each of these buckets, but probably only translate it into USD, and we specify how we use the rates that are loaded. So in this case, it's a multiply basis, but you can have a divide as well. Moving on quickly then to just look at, for example, the conversion rules, and this is where we really see the benefits of this no-code approach. Each of the rules, so let's look at the NBS rate. Remember, we looked at the export of the account dimension, and NBS was against the balance sheet items. That is telling me that for anything that's flagged with NBS, this is what I'm going to do. And this is quite a complex approach. Typically, I see them being much more simple than this, the balance sheet, but it is what it is. This is telling me that for the opening movement against any account which is flagged as end balance sheet, take the movement, the opening movement, post the result and what I do to the target movement, so post it to itself, and translate it at what was called historical. And for the opening, take the opening and end rate, post it to this a new flow. So I'm moving between flows, CTA and opening, and also take the same value again, post the result to CTA opening. But this time, as you can just see here, apply a negative of the historical rate. So effectively now on this CTA opening, I've got opening at historical rate less opening at end rate, which gives me a CTA movement on that. We can apply that, but importantly for this solution, and typically the CTA is actually within the account that it relates to. So for current assets and current liabilities, which is what NBS is flagged against, the movement on any FX is within the balance sheet itself. For equity, so if we look at current year net income, again, this will be flagged against particular accounts. This is a very simple rule. Take the result of the period, which is a movement. Actually look at the periodic value. So look at the movement, the total movement year to date for this month in local currency, subtract the total movement for last year in for last month in local currency to get the delta value. I'm going to post the result back at average rate. So that's the translation done. But then I'm also going to translate the result for the period against the CTA flow. But notice I'm moving to a different account here at end rate, and I'm going to do the same by taking the year to date from the source value, source balance in currency, and apply the average rate. Again, applying it. So for equity, we're going to move the CTA off the account and push it into a separate account. That's how we do it. But again, it's a business concept. Where am I taking my data from? What do I want to do with it? Where do I want to put it? What am I going to apply to it? There's a couple of other tweaks in this that you would do, but that's how you get there. And similarly for consolidation rules, Again, this is a one-time setup, typically something that will be maintained by your system admin or your supporting consultants. Let's again look at stockholder equity. That was the one that we again we looked at in the Excel sheet. So let's just go there. Stockholder equity. So this applies to these three accounts only. And again, open it up. This is saying for any account which is flagged with stockholder equity, so this is blank, all movements for the current period negative, so reverse them off 100%. And we're going to take the same value and we're going to add it to a different account, 3215, but we're going to apply a percentage to that based on the ownership. So if this was 100% subsidiary that we're applying this to, the group part would also be 100. So you've moved it from stockholder equity to stockholder equity group part. If it was a 10% minority, you'd have 90% and 10%. So you'd have another posting coming on here. And 3225 would roll up within your non-controlling interest in the equity section. Again, pretty simple, pretty straightforward to follow. These things don't change that much once they're set up. They are not generally scenario specific. So once you've written them, they will apply to all scenarios. So you would just flag the accounts. The other option that you have is to use that tag that I spoke about, where you can have multiple tags, and you can actually use tags and or account names specifically to do things with specific accounts if you want to. But the benefit of using a tag or the name of the property is that it allows you to just build this rule, build it once, and then when you add a new entity, a new account, for example, as long as you know, if we suddenly have a share premium 2 account, we just specify it as stockholder equity if that's what we want, and the rules will apply to it as soon as we have it. A couple of last things in here. Carry forward rules are the same. Again, we specify quite simply the accounts that we wanted to apply to and how we wanted to apply. So for balance sheet accounts, we're just going to take all values and push them to closing, depending on where they're at. We've got a variation profit on inventory which goes in, and over here it would be target movement. So closing to opening in this time is to be allocated, so that profit would need to be reclassified in the new year manually. But again, don't see that very often at the moment coming in. So rollover rules follow the same process. Just quickly with the time I've got available, the data loading process in here, we talked about the format of the loading definition. That's defined as in a staging table. So if I edit a staging table, this is a simple staging table with what six columns. We define the data type, we define the SQL value type. This creates a table. We don't need to use all of these, but we're saying that actually our source data is in this format, so we're going to load that. Having loaded it, we apply an import definition. So this then says for the file that we've loaded, the view that we've got of the data that we've loaded, the source field, so this is in the staging table, is account. I'm going to match name. So what this is telling me is that it assumes that the account in the source is identical to the an account which exists in the system. So just go 1 for 1. If it doesn't exist in the system, it will throw an error. This is a pretty straightforward mapping. It's assuming that everything that's in the input file is in the system already. we go down and look at one of these other entities, we have the ability to change that. So we've got a couple here, different ones. We've got a map. So we've got a mapping table. So take the account, put it through the mapping table and send it to account. We're hard coding because this is fixed, the source GL, and these are all match names. So if we have a quick look, again, very briefly here at the mapping tables. So let's just look at this one for full mapping. You can see we've got these exacts. So whatever this value, this specific value goes here, this specific value goes here. We've got several different wildcard options. So if it's 1010 and 4 characters, it goes to 1010. If it's 1100 and anything else, it goes to 1100. This is a range, so if it's between those two numbers, it goes here. This is a set, so it's not necessarily a contiguous set, but actually if it's in that set, it goes to here. So a number of options, but importantly, we can't do any transformation. Once the data's in the staging table, we can't transform it. So you would need to look at your upstream source of data if you need to do concatenation to get unique references to be able to map, for example. We've got a security module. Again, there's a whole session on security, but suffice to say that we would build roles, and typically the way that I build this is to build a role for activity. So an administrator and a user telling me what they can do. So an administrator can do everything a user could: input data, run reports, etc. And then we create data specific roles. So I can, as a user, I can do all of those things, but I can only do it with Europe, for example, or I can only do it with USA. And we build them up as a complementary set of information. So again, doesn't require IT. It's very controlled in here. You bring the user in, and depending on how you've got it set up, you've got it set up a single sign-on, and the user's been made available to you by your IT guys. You can just bring it in here and set it up. The last thing quickly, and again, this is a whole session of ability, is on Anaplan Excel. It's a very, very powerful tool. I don't really have time today to look at it, but it's going to be familiar to those of you that use Power BI or that kind of reporting tool. Drag and drop into rows and columns. We can specify what bits we want to see. And the report will build for us, and then we can modify it as required. So we can change, we can drill into it if we want to here. And you can change pretty much anything in this report to structure it. This is very dynamic, very useful for drilling into data. Usefully also in here, Anaplan allows you to drill through. So I can find out what's making up that data. So for that one cell of data, the formatting is a bit screwy here, excuse me, but it's showing me where the data's come from. It's making that up. And this, as this is a high level member, it's a lot of data, but obviously for a lower level of information, you would be able to see it. So it's very powerful in that respect. That's a basic report, but quite often I get asked about these. Can I write a more static report that doesn't change or combines different things? So yes, you can. In this case, this report is currently using Jan to September actuals, which you can see here. If I change this to budget, and I move it across, then it will refresh the report, and now we're looking at actual to June and budget to September. So it's a very powerful tool, excuse me. As I mentioned at the outset, it connects through to a number of different data sources. So we have it here, we've got it going to Anaplan itself. For those of you already using Anaplan, all these data sources it can access, assuming security set up, which means you can bring in data from multiple data sources into Excel, potentially on different sheets, and then you can blend it into a report that you produce on the front. So that's that. The only other thing in here is that you can publish to the web. So I can publish a workbook to the web quite easily here by specifying where I want it to go. And again, this publishes it up to a folder in the web, and you'll be able to see it as we saw before as a web report, which you can download. So I'm about out of time now. I don't know whether we've had any questions, but what I would say is if you are interested in FCR and you think that it would be useful for one of your customers, or you are a customer and you're interested in seeing more and seeing a more detailed demo, then please contact us, reach out through LinkedIn or directly onto our website. We're happy to work with you if you're an Anaplan salesperson trying to get this into a customer, or if you're a customer that's joined the call and are interested in finding out more about it. We can work with our colleagues and your contacts in Anaplan to come up with a demo that works for you. We can spend more time on those areas that are relevant to you. It's a very powerful tool. It's very user-friendly, and it's very important that it sits within the Anaplan universe. So it does work well to integrate into the planning sphere, and we're increasingly seeing it being deployed alongside quite complex planning scenarios. A lot because obviously the Anaplan Excel is common now to both planning and consolidation, but as companies become more aware of wanting an integrated solution, but are wanting best practice in certain areas, this allows them to deploy a purpose-built consolidation capability within their Anaplan universe. So again, thanks for joining us. I'm sorry we've overrun a little bit and we've kind of rushed through a number of areas, but hopefully it's whetted your appetite. And as I said, if you're interested, please reach out. Please keep an eye on LinkedIn and Kabeelah in general. We will be looking to do more webinars and maybe more focused webinars as we go through this year, looking at specific areas like setting up for consolidation, like using Anaplan Excel for reporting, some tips and tricks, etc. So look out for those. But again, thanks for joining. Carrie, is there anything else we need to add to close off?
No, I don't think so. We've not had any questions. That was very comprehensive. As Howard said, if you do have any queries for him, feel free to reach out directly on LinkedIn or by email via the website. We'll get the link to the recording ready and make it available to all of you over the next few days so you can rewatch or share with colleagues. But no, thank you for tuning in and enjoy the rest of your day.
Thank you. Goodbye.